Nvidia's stock should easily attain a market valuation of between $50 trillion and $60 trillion over the next 5 years, in my opinion. Microsoft and Meta both stated that there is a greater need for AI and that they will continue to expand their capacity, which caused Nvidia to surge 12%. I know you've discussed this a lot before, Chamath, so perhaps you could share your thoughts on the remarks made this week. Although you have previously stated that much of this build-out is still in the planning stages and that there isn't a tangible return on investment, it is evident that some of the purchasers of this capital equipment are saying, hey, there is ROI. We're going to continue to build aggressively. Therefore, perhaps you could briefly discuss whether anything has changed or if we are merely witnessing people rationalize their choices. Unfortunately, it's just another instance of sell the news. After hours, these things rallied phantom, and if you look at them, they have all simply returned all of their gains. I believe that people are aware that Nvidia was the original developer of Tesla's innovative technology. Until the business eventually created its own internal systems, these GPUs powered Tesla vehicles. These original Nvidia cards are now highly sought-after collectibles that sell for hefty prices on the illicit market. For instance, some rare editions have sold for hundreds of thousands of dollars, and one specific model is presently going for $19,000. You may get yours right now by clicking the link below, but don't delay, stock is very limited. We are at the very end of the AI hype cycle. People seize the chance to simply sell in large quantities once these things spike. I mean, today, Nvidia's shares total 38 million. It's crazy indeed. It is trading like a penny stock, and it is literally the first moment of the day. Like a lead balloon, it's falling straight down. Indeed, Meta made a comeback, but they have essentially forfeited all of their advantages. Today, it's kind of gone downhill. However, that is not the issue. These businesses are not going to go to zero. The idea is that people are optimizing at the moment. Since nobody can predict when all of this phantom money will materialize, I believe it is reasonable that they are selling whenever they can in order to sort of book the profits. Therefore, this has nothing to do with what we would refer to as the economy, the recessionary debate, or the recent rate discussion. Look, I'm currently dealing with 80-90 in this situation. Being able to launch a business at the onset of what I believe to be the most significant wave in my professional life, since social networking has been one of the highlights of my career. I kind of tried to ride the best wave I could there after jumping into the center of that one. My honest conclusion after 7 months of rigorous work in this field, and I want to continue for as long as it takes to establish a profitable business, is that artificial intelligence is incredibly deflationary. The outcomes are very significant in terms of the amount of efficiency that can be captured and the costs that can be avoided, and it doesn't cost a lot of money. And because it enables us to price differently than incumbent solutions, the appropriate business people, that is, entrepreneurs who are starting from scratch, like my co-founders and I at 8090, will pass it on to our clients. Therefore, I don't envision a way where a large portion of the money that has been spent suddenly appears. I've failed to see it. I do see a way for businesses to find great. Consider it this way. What is the most profitable operational company that existed in the 80s? Is what you would ask if you were looking at the 1980s. Although I'm not familiar with that business, I have a suspicion that their EBITDA margins were in the neighborhood of 30 to 40%, and they were very likely amazing. 40 years from today, the most efficient corporation will most likely have EBITDA margins of between 50 and 60%. In actuality, the top AI-enabled business will most likely have 70 to 80% margins within the next 15 to 20 years. That's an amazing thing now. That's a bold forecast, but it will reinforce the fundamental principle of capitalism that everyone tends to overlook. You compete away excess return. Therefore, there will be hundreds and thousands of businesses with operating margins of 60% or more, but they will be in much smaller markets. Therefore, I believe that although the market as a whole expands, the number of businesses increases by an even greater order of magnitude. In all of that, the truth is that these huge people will find it quite difficult to sort of see this value capture that justifies any of this expenditure. In light of the capital expenditures that have occurred here, I believe that you will need to do some kind of reset because of its crucial role in the AI revolution. Nvidia is a desirable choice for investors with a long-term outlook because of its steady focus on developing its technology and growing its market share, which positions it for long-term success. Today, Nvidia's stock is rising once more. The stock surged yesterday, increasing its market capitalization by $327 billion, propelled by AMD's impressive performance. However, even with the recent upswing, Nvidia's stock is still about 133% behind its peak. Now we'd like to introduce Stacy Raisin to discuss the future of Nvidia and some of its rivals. He is a senior analyst and managing director at Bernstein. It's wonderful to speak with you once more, Stacy. It appears that a large portion of that enthusiasm has now returned. I would like to know if you believe that the sentiment has changed as a result of AMD's results yesterday. Therefore, I don't believe AMD's results were the real issue. I believe it has to do with the capital expenditure guidelines that many hyperscalers like Google, Microsoft, and Meta are releasing. Those capital expenditure outlooks all appear to be pretty encouraging. Those figures are beginning to rise, and I believe that's what's been fueling the AI trade. Actually, I don't believe AMD was the cause. AMD's outcomes weren't always negative. They somewhat followed their own AI guidelines, but I don't believe they did so any more than many had anticipated. It wasn't higher than people believed, in my opinion. What does it tell us about the possible opportunity and upside for these chipmakers, Stacy, considering the capital expenditure guide that we are receiving from some of these hyperscalers? You see, when you look ahead to where expectations are, some of the numbers are really high for organizations like this. The hyperscalers, who are large clients, are responsible for a large portion of that expenditure. Therefore, you do want to see an increase in those numbers. If you go back, say, a quarter or two ago, this was a problem. At the time, there was a significant discrepancy between several of these AI names and the expenditure outlook, and we'd have since seen the CAPEX guides increase significantly. Even Meta, I believe, reported yesterday night, and in addition to raising their capital expenditure guide for the year, they stated that they will likely see significant increases the next year. That, in my opinion, is what matters most. People's main concern is simply whether an air pocket will form soon. Spending has increased significantly, and the numbers have grown rapidly. People are concerned about sustainability, and from what we've heard from some of our consumers, it appears that the expenditure is sustainable, at least for the time being. That, I believe, has been the main factor. Therefore, Stacy, when we consider expanding into some of these valuations, what will these businesses need to demonstrate in order to reach the high figures we've been talking about? Exercise caution. For example, high valuations and high numbers are not the same thing. These businesses aren't all that costly, are they? As much as the price has increased, the profit forecasts have increased even more. So if you look at a business like Nvidia, it's actually much cheaper now than it was before the run began, say, a year or a year and a half ago. The question then arises, are the profits indeed attainable? They must, without a doubt. The numbers must increase. In my opinion, the buy-side figures will be much higher than the sell-side numbers, considering the investor's position. Therefore, it is beneficial to monitor any growth in client spending, as well as any clarification on business strategies and what the companies are really doing with this money. Additionally, I believe that the feedback we are receiving from the supply chain and customers is positive, at least for the foreseeable future. Because of the inherent volatility of the computer sector, even market leaders like Nvidia may encounter serious difficulties. Economic uncertainty and market swings might affect stock performance. Long-term investors may be exposed to significant risks due to the high value of Nvidia's stock if the firm does not live up to the high standards set by the market. Investors must carefully assess potential risks because Nvidia's long-term performance may also be impacted by changes in technological trends, pressure from competitors, or unanticipated industry disruptions. Pros of short-term investing. The stock price of Nvidia has fluctuated a lot, which has given short-term traders the chance to profit from price swings. Stock prices can rise quickly in response to good news, such as impressive earnings reports, business alliances, or technological advancements. On the other hand, unfavorable events or market corrections may cause prices to decline, providing short-term traders with chances for rapid profits or